Because if I hold it, it's too wiggly when I hold it.
Mm-hmm.
So
We definitely need this one. Time to listen to the wonderful world about credit unions today. Who here's ever been part or a member of a credit union before? Okay, so why did you guys ever join a credit union versus a bank?
My car loan went through them, so I just kept the account.
Sure. You get a better interest rate than a bank? All right, I paid him $10 out in the parking lot to say that. My name's Chad. This is Arturo, and this is Trin over here.
Hi.
We're from Bay Cities Credit Union, and we're glad that you had some positive experiences through prior relationships through credit unions. But the whole idea behind a credit union is that credit union is a true nonprofit, just like a church or a school. They don't pay state and federal tax. They don't pay out shareholders. Anyone that belongs to a credit union owns part of that credit union. So all the interest that a credit union makes off of home loans and car loans and credit cards and stuff goes back to the members. Higher rates on savings, lower rates on borrowing, and free services that banks don't offer might charge you for. 9 out of 10 times you get a better deal through a credit union than a bank. Doesn't even matter which one you go to. It's just they don't have the overhead. It'd be like if this business right here, ISI, they didn't have to pay taxes and they didn't have to pay the owner, then the company would have more money to pay the rest of the employees higher wage. That's like a basic idea of how a credit union works. We're based out of Hayward, but we're part of a co-op network where we have 8,700 branches, physical branches you can walk into, and 28,000 free ATMs. So you can go into any Patelco, Provident, Golden One, First United, you see any other credit union around, you can take your Bay Cities card, go inside, give their card to the teller. When they swipe it, Bay Cities screen pops up on their screen. You can do your over-the-counter banking. It's all free, doesn't cost anything. Credit union's free to you guys, doesn't cost anything. All the services are either free or discounted. But also, besides those credit union locations, there's 8,700 or 28,000 free ATMs that are just scattered around in different places. And then any 7-Eleven that has an ATM machine side, you can do your deposits and withdrawals for free. On the way driving up University, I saw 2 7-Elevens, so I know you have 2 credit unions within a mile of here that you could, or 2 ATM locations that you could access your money if you wanted to for free. You can belong to as many banks and credit unions as you want to. I belong to 1 bank and 2 credit unions, and the reason why is because I'm loyal to my dollar. There's no best bank out there that has all the best deals, right? But if a credit union's free, they don't charge you to be a member each year. All the services are discounted. You hear that 9 out of 10 times you get a better interest rate through a credit union than a bank. It's nice to have that in your back pocket because whenever you want to have a financial service, want to get a loan or work on any type of different thing, it's nice to have something other than a bank where they have competitive interest rates. Because like I said, who I'm loyal to is my dollar, and I want to get the best deal. So even if I have my car loan through a bank account, they're giving me like 6%, credit union's trying to beat that by 2 to 3% on whatever interest rate you're currently paying. So I could go to my bank and say, hey, I just joined this credit union. They want to give me 3 or 4% on my car loan. Are you willing to beat that? And they're like, oh, 6% is our lowest advertised offer. Lots of times they'll go lower than what they even have advertised just to keep your business. So even if you don't get the loan through us, maybe we can help you save interest on the current interest-bearing account that you have right now through your current financial institution. Some of the things that we offer that you might not get through your current financial institution is number 1, the credit score builder. We'll sit down with you one-on-one, bring up your current credit score, go over how much money you make, what your monthly bills are, what you spend money on, and we'll improve your credit score 10 to 30% each year. On top of that, if you get a loan through us, refinance, consolidating debt, you currently have anything that you're paying higher interest than you believe you should, if you move it to us, we're automatically trying to beat it by 2 to 3%. On top of that, this program, all these programs are free. We'll, if you move that interest-bearing account to us, we look at your credit score, we look at your credit score every 90 days, every 3 months, and as we help you improve your credit score, we modify and drop your pre-existing loan rate. So everyone here has had like a car loan, right, where you pay interest. When your credit score goes up, it just stays there, and you continue to have to pay that rate. Our whole idea is if we help you improve your credit score, drop your interest rate, help you pay off your loan quicker, maybe you want to come back and do business with us again in the future. Crazy concept. Help you out, maybe you'll come back for return service, right? Discounts on vacations, Great America, Marine World, Disneyland, Vegas, hotel rentals, car rentals, airplane flights, cheaper than AAA. $300 3-day cruises, stay in a hotel for 2 nights to give you 6 tickets to Disneyland or 2 adult 3-day park hopper passes for free. So if you, your families, your friends want to go on vacations, we know they're expensive, but if you could save half the money, maybe you could go on more exciting vacations and it'd be a little bit more affordable so you can do the things that you want to do. Refinance anything that runs on the surface. You want a car, truck, motorcycle, wave runner. We don't do helicopters or submarines, but if it runs on the surface, no money out of pocket, right down all the way down to D paper. So if you've been through a horrible divorce, lost your house, we hear every day, my credit score has been destroyed, we will help you work on your credit score. We'll get you into a set of wheels, and then we'll help knock down that payment as quick as possible so it's the most affordable for you as quick as possible. Yes?
What if you already have a car and you want to refinance?
Yeah, if you want to refinance, you think you're paying a high interest rate.
What if you have bad credit?
Then we're going to help you improve your credit, and as your credit score goes up, we're going to drop that interest rate down so it's more affordable, you pay it off quicker. So we offer all the traditional CD checking, online services, phone apps, every free notary service, everything that bank has, but it's either going to be free or discounted. Well, one of our main purposes out here is help you guys get to your goals. So let me ask you guys a question. Since the day you guys all started working, are you guys all happy with how much money you've saved so far? I hear laughter, I see no hands in the air. We get it. It's a trick question. We live in California. We live an expensive lifestyle. We spend money on all sorts of stuff we don't need, but how many times have I said I can't afford the vacation, the car, the house, the this or that? It's not that you guys don't make good money. It's just we have trouble keeping our hands off of our own money. So through payroll deduction, direct deposit, you can take a little money off your paycheck, set it aside for a short or long-term goal, forget about it, and when those goals come up, you're like, oh, I have a couple hundred or a couple $1,000s to do some of the things you want to do. It's like what our parents always told us, save part of your Christmas or birthday money for a car, for college, or whatever. We didn't like it then, we don't like it now, but we understand it's important to do the things that we want to do, right? So when it comes to savings, there's 2 types of savings. There's short-term savings goals and long-term savings goals. Short-term savings goals might be saving money for this weekend or maybe for the next couple of years. That might be for vacations, Christmas, emergencies, somebody can't afford off a regular paycheck. Christmas is coming up. I bet we all wish we had an extra $500 for presents or food or this or that, you know, but we didn't save for it, so now we're trying to be tight on our paycheck and get through. That happens to us every single year, right? To join the credit union, all you need to do is keep $25 in there as a minimum balance. That's just a deposit. That doesn't even show up on like your checking account or anything like that. It's just to be a member. You ever leave the credit union, you get your $25 back. Credit union's free. To get that $25 in there, you can put in as little as $5 a week. Once you have your $25 in there, you don't have to put in any more money. You're a full-fledged member of the credit union. You're eligible for everything it has to offer. But if you'd actually like to save some money, you can contribute any amount that you like to out of your paycheck. You can change it whenever you want. You just fill out one of your direct deposit forms and you put a smile on your face when you talk to the payroll person because they're nice enough to help you out with your accounts. We do have competitive rates. It's a little bit higher than banks, but when you're talking about a 0.5 or 0.1, it's not even really worth bringing up because it's not even a percent. But money comes out of your paycheck today, you get an ATM card, you can pull it right back out today, right down the street, a block away, no fees, no charges. It's an easy way to just have access to your money, but the whole idea is we also don't want to touch the money because we touch our money all the time anyways, and that's why we don't have as much as we'd like to have in our accounts. For long-term savings goals, we're talking about saving money for 5 to 10 years plus. That might be for retirement. Who here wants to work to age 67? Yeah, I don't either. Maybe you have to save some money early so you can get out early. Maybe to buy a home. How many of you have children? Maybe give them a chance to go to college someday. Those are big-ticket items you have to save up for a while. Technically, this is a life insurance policy, but it's not really meant for someone looking for a death benefit. It's only offered to federal employees and military. But because we work with unions and because we're a corporate credit union, you can only join through a business, there's a gray area where we're able to offer out government-style benefits that aren't available to the general public. You can only put $12.50 to $50 in per week. You can't even put a percent of your paycheck in there. You can only change the amount that you put in once a year. Every January 1st, they send you a letter in the mail. They say this is what this year's guaranteed interest rate is. Interest rate's guaranteed, so you can't lose any of your money. It's currently paying 5% interest, compounded daily, paid daily. On average, this policy has been around for 1 year longer than I've been alive. It's been around for 35 years. And for 35 years, it's been averaging 9.97% interest. So 10% interest, compounded daily, paid daily for 35 years. It's a pretty good track record. It's tax deferred, so the money you make on it, you don't have to claim on your taxes each year. Quick example for how this works. How many of you guys spend $5 a day on something you don't necessarily need? $5 foot long, well, I don't even think those are around anymore. Starbucks coffee, we go out with our friends on a Friday or Saturday night, we can make $25 disappear really quick, right? But if you save $5 a day, Monday through Friday, 25 in a week, 100 in a month, around 1,200 in a year. If you were 35, going to work to age 67, the reason why we use age 67, Social Security says, you know how it comes out of your paycheck, right? They say for you to pull out max retirement benefits, 67 is the prime age to pull. The Social Security will give you the biggest paycheck. So we use that as a general idea of when the government thinks you should retire. If you were 35 and going to work to age 67, you work for 32 more years. If you save that 25 a week, the 1,200 a month, or 1,200 a year, for 32 years, you would save $41,000 cash. Let's say you don't like me, you don't want to talk to our tour train, you just want to take a $5 bill, put in the trunk of your car each day, you'd have an extra $40,000 when you retire. Shows how saving a couple bucks each day could add up over time. But this policy, 5%, worst case scenario, the economy stays as poor as it is now for the next 32 years, that'd turn your $41,000 to $71,000. That's a $30,000 profit, pretty much doubles up. The average for this policy for the last 35 years, the 10%, so the people that signed up the day I was born or before I was born, and they put their $41,000, they've already been paid back $140,000. There's immediate $44,000 death benefit, and if you keep the death benefit grows, so if you keep the policy up to age 67, it grows to $127,000. So if something were to happen to your family, would get that death benefit along with all the cash you had saved up in there. No fees, no penalties, all the interest, tax-free. But you know what? I don't want anything bad to happen to you guys. You know, you guys seem like nice people. All the money that you have saved up in here, you can take out and use whenever you want. You understand? You have emergencies, opportunities, and if you're in other programs, save money for retirement. Those are great. There's lots of tax-deferred privileges, but those are meant for retirement. This is something, 5 years from now, you want to remodel your house, you want to take a trip around the world, you have access to your money whenever you want. The only thing is you don't want to take money out in the first year or two because it's trying to compound, it's trying to build up. That's why I say save money for 5 to 10 years plus, because if you start taking money out in the first 2 or 3 years, it's never going to build up and get to where you want it to get to. This is an example for $25 a week. If you did $50 a week, it'd double it. $12.50 a week, and cut it in half, or anywhere in between of $5 increments. You can do as little as $12.50 a week over here, as little as $5 a week over here. If you want both, it'd be $17.50 a week. If you want to save more than that, you can save more towards one or the other, depending on what your goals are and what you're trying to accomplish. Since I didn't see a whole lot of hands up in the air saying that you guys were really happy about with what you're currently doing to save towards shorter and long-term goals. This isn't the only way. These are just opportunities that you can save a little money out of your paycheck, put it aside, forget about it, and have a little money saved up for things you want to do in the future. So what we try to say is come up with a comfortable amount of money that you like to save each paycheck that won't affect your current lifestyle. Not meant to stress you out, not meant to change anything that you currently do. That's why it's so low on either one. You can do a small amount or you can do a large amount, but it's just meant to be a device, a way to save money for short and long-term goals. Questions?
Does that life insurance require physical?
No. If you're at a certain older age and you max it out, then it can, if at some point, like for someone like maybe like in 45 plus, instead of doing $50, you'd have to do like $40. Like you wouldn't be able to max out unless you wanted to do a physical. But anyone like under that, it's a very small policy. It's more focused on cash building than a death benefit. Any other questions? Yes.
Is there a penalty if you pull money out, say, in 3 years?
So how it builds is that the first year you only have access to about a third of your money. At year 2, you can pull out all the money that you put into it the first year. So they don't penalize you, but it just takes a couple years for it to catch up. The way I try to explain this one that makes it easy for everyone to understand, who here pays car insurance? Everyone, right? Are you ever going to get any of that money back? Are they ever going to refund any of that money to you? No, of course not, right? But what if they said, hey, in 3 or 4 years, you never got in an accident, you want to cancel, we'll give you all your premium, all your money back. You'd be like, sweet, I'd sign up for that place. And they're like, hey, if you keep it more than 4 years, if you decide to cancel in the future, not only will we give you all your money back, but we invested your money and we'll share that profit. So it just takes a couple years because at the beginning, like I said, the compound interest has to build up. But at the same time, you keep it for a couple of years, you cancel it, it made enough compound interest that it's paying your monthly premium, so you weren't paying it yourself. So it's like almost like an added bonus. The whole idea behind this was, you know how there's militaries get the $350,000 VA home loan? This is the program that the military uses to get them the down payment. So after they do their boot camp and their 1 or 2 tours and they come back, they're like, oh, I put $10,000 in, put out $20,000, $30,000 in there now. There's my down payment for my VA home loan. This is what they use. But just because it works for them doesn't mean it doesn't work for other people too. Any other questions?
You said the interest is set at the beginning of the year?
Yes, every January 1st, they send you a letter and they say, this is what your fixed interest rate is.
And that's the same interest rate for everybody who's
For
in that credit
well, it's, the credit union is different. The policy is what it comes out each year. The credit union, you know, interest rates change. They're non-variable. You know,
What's
goes
the
with what the
interest rate for this year?
For this is
No.
for this one it's 5%.
5%.
It's guaranteed at 5%. It can only go higher than that. So like we're pretty much at the bottom. The last couple of years it's been 5. When I started like 8 or 9 years ago, it was at 7%. It's been as high as 13 in the 90s. But it's like a military thing, so they're not going to do anything that's not going to help them. You know what I mean?
Is the investment FDIC insured?
No insurance programs ever FDIC insured. Credit unions, but it's by the NCUA, which is FDIC for credit unions. Same type of thing, up to $250,000 per account. But no insurance things, and that's all. That's why you can only show what's been done in the past. You know, 35 years you're paying 10% interest, and you know no one can tell you what the future is going to hold. But as long as the company is around, they can show you that it's guaranteeing 5% interest. You know?
But the DOI regulates it and has to have the reserve to cover all.
Yeah, for every $100 that you have in
So
there,
the
they have
company goes out of
$135 in
The
reserve.
DOI would take over and then have another firm.
Yeah, I mean,
take over
this is like the
country.
program that like
And they
the
would honor
Teamsters
the
and the
contract.
unions
Okay.
offer out, so I mean, they're not gonna be offering anything that's gonna do anything bad for the
You
members.
said there's a minimum investment every week, month?
This one you can do as little as $5 a week, this one you can do as little as $12.50 a week. $12.50 a week, up to $50, and there's a cap. Because back when Ronald Reagan came out with this, that's when they kind of reassociated some of these programs. There's people that were like, hey, I want to put $1 million in a week, and they're like, well, we can't pay you 5% interest compounded daily on $1 million because, you know, there goes inflation, all those different things. So $50 a week. So you can't even put like a percent of your paycheck in. It's like 0.1% of 1%.
What determines the cap? If I'm 63, can I put?
Unfortunately, because of mortality tables and it's a military product, they cut it off at 60.
Oh, okay.
But
there-
we do
there's
have other things.
yeah,
Yeah,
there's
these
other
are just the main 2
programs.
savings programs that we go out and offer. That they're the most used ones because they're special. But we do have other programs. Any other
Basically, it's just a saving program, and then they pay life insurance.
Yeah,
And then someone then they get the benefit.
I mean, like, we don't really want to give out life insurance at all. But what the life insurance does is it makes it tax deferred, because the government says if you make more than $12.50 interest in a year, you have to pay tax on it. But you look at 401ks, different things, there's different ways to encase savings programs and other products that you can get tax deferred savings. So instead of each year you make money, pay tax, make money, pay tax. This is something where it goes all the way up and you can pay your tax at the end.
So if you withdraw early, do you have to pay the tax penalty
You
then?
have options. So you could either pull money out early and not pay any penalties. But if you say that the cash and the insurance, they both go at the same rate, pull cash out, it drops the insurance back down to where you left off. But you can pay a 2% fee if you want. If you really want the death benefit, you can pay a 2% fee. So when you pull cash out, the death benefit just grows like it was never missing. Also, there's a kind of a military little gray area, like they don't like us telling this, but this is just the facts. According to IRS Code 101, I know it sounds silly, as long as the policy is enforced, you can take all the money out, you don't have to pay taxes. So what some people do is they will, at age 67 or whenever they retire, they'll reduce their death benefit and they'll leave $3,000 in there, $3,000 to $4,000, and it'll cover them up to age 99. So you can pull all the money out, not pay any taxes, because the policy is still in force up to age 100. Do you think you're going to live to 100? Maybe, but probably not. And at 100 years old, they could come after you. The IRS could come after you, but usually you liquidated all your assets and all the different things before then. So there is different ways to truly make it a tax-free program. I know it's kind of twisting the system, but rules are rules. They're giving you rules to play by. You can maximize it however you want to. Any other questions?
So it's tax deferred.
Tax deferred, and it comes out of your check after tax. It's not pre-tax going in. It's after tax.
You just don't pay
Because
taxes on
it has
the
nothing to do with
interest.
the company. This is a product that's encased all in itself. The companies aren't contributing or anything.
So the interest is tax deferred, is that,
Correct.
that's what you're saying?
Yeah, principal, technically, when you withdraw, you withdraw the principal without any tax consequences.
Unless, if you decide to cancel it. Or you could leave it in force, you could be like, hey, I need to borrow 10 grand out, you can just take 10 grand, and then when you decide to cancel, you can pay the tax at the end. Or like I said, you could leave it, if you decide to keep it forever, you could leave a couple $1,000s in there, let it ride, pull all the money out, not pay taxes until whenever. But if you pass away, if you take all the money out and you pass away, family still gets the death benefit. They don't get charged anything. That'd only be to you. Any questions on I know this is exciting, but we have other exciting stuff over here. Did you guys have any questions on the vacations or the credit build or anything?
I probably missed some at the beginning. How do you join? You have to come to the company.
Yeah, it's
deposit from the company.
so we're corporate credit union. Lots of credit unions you can just walk in off the street, like Bank of America or like Golden One. You can just walk in off the street and open an account. Ours, in 1987, credit unions, a lot of them became deregulated. We chose to be a corporate credit union that only deals with businesses for employee benefits. So you can only join our credit union through this business because they decided to offer it out to you guys. But also anyone, a family or blood relation could also join. So anyone in your family, if you thought it was a good deal and you appreciate the services we have to offer, you could also offer that up to them too.
What do we leave the company?
Once you're a member for life. You get to take it with you wherever you go until you decide that you don't want to do it anymore.
And the fee, is there any fee?
For the credit union, you just gotta get $25 in there as a minimum balance. You're a member for life, you're good to go.
And then have to put in our paycheck or through the company every $25 a month?
No, it's just
Just
five
one time?
one time, but it's easier to do $5 a week versus a one-time $25 thing, because it makes it a lot easier on the payroll people. Because then they're not just like, one, and now I have to stop like right after the deduction. It's easier just to do the $5, and if you want to stop after that.
No.
You need
Not here,
$25.
stop.
Join, right?
One time, and one time only, okay? You can do that.
When it comes to this, we're just trying to make the payroll person's life as easy as possible.
No, you're not.
If it's one time, that's easy, but if it's one time a
Yeah.
month, that's hard.
Yeah, exactly.
You still have to say.
Yeah, however you want to set it. If you want to let them do a one-time $20.
Well, see, we're missing Alice, and she's the one that does that payroll.
And how safe is it, because nowadays, a hacker, everybody.
This is insured just like FDIC by the NCOA up to $250,000 per account. So it's just the same as a bank. Not one credit union has ever lost one penny of a member's money. Banks can't say that. Banks have lost millions and millions of dollars of people money. Credit unions have decided to go over, and there's an issue with that. Bigger credit unions cover the both smaller ones. That's how their system works. But that's why they can say they've never lost.
How big you are, like ranking?
Well, we're a corporate credit union. We're the only one in Northern California that do what we do.
So we don't really compare